All right. Good morning, good afternoon, good evening, everybody. This is Will Bridges from 123Trade. Got a big prediction for you guys in this morning's trading session. I hope you guys are excited. Well, let's just say the holidays are over. We've got a new year to look at. Q1 is going to be very interesting. I'm expecting a decent amount of volume. And really, I think we've got a pretty big opportunity that I want to share with you guys here today. So I hope you guys are ready. I want to make sure everything is working the way that it should. You guys can hear me, see the screen. You guys should be looking at Jared Martinez right now, talking with his hands. And let me pull up the questions box, make sure that. How are we doing, Afzal, Philip? Everybody wake up. Daniel, Elizabeth, Gabriel, Gary, Gideon, Yanni, Joan, John. Hope you guys are ready. Steven, Sam, all the way down in Australia. Got a fun one for you today. It seems like the audio is working. It seems like we're ready to go. Let's go ahead and get the show on the road. So, first things first, I got to cover my base. Well, everything you're going to see in this trading session here today is going to be for educational purpose only. There's no such thing as a guaranteed trade or a guaranteed investment. Just simply doesn't exist. You got to risk it to get the biscuit, as I like to say. So you will see me trading with a stop loss. But we're going to do lots of research here this morning. I'm going to go through the news from this week. I want to talk about a little bit of forecasting stuff, and I'm going to show you guys a couple of indexes that have kind of led the team over here to the idea that there might be a pretty big opportunity this quarter. And I do intend to show all of those trades to you throughout this presentation. You're going to want to pay attention to the whole thing. There is going to be a lot of different information from currency pair to currency pair. But let's go ahead and if you guys do have questions, some of you might be new here. Newmeyer, I'm not sure if this is your first time, but good morning. If it is your first time here, anybody, and if it is not your first time, Newmeyer, please, I hope you can smack me on the hands with a ruler sometime soon. But if it is your first time here, ask questions. If you get lost, someone else might be too. And the whole reason why I'm here is to help you guys understand how the functionality of trading works, how to go about necessarily making a decision you can live with. And that's really the most important part. You know, I'm not here to tell you guys necessarily, hey, you should put all of your money right here. That's not what this is about. Okay, I'm trying to teach you guys how to manage risk really in the way that I've been taught. And that's the most important thing. That's really what trading is all about. You don't have to win every time to be a profitable trader. Okay, so let's go ahead and get a little bit further along the lines. Some of you are very familiar with who we are. You've been coming here every week for the last 2 years. This next 15 seconds is not going to be for you, but I promise we're going to get to the actual news and the charts here in just a couple of minutes. But if you are looking for assistance in getting regulated secure brokerage, that is our primary function. Okay, send us an email to brokers@123trade.com if you're watching this video on YouTube, or if you are watching this live right now with me and you need help with your account or getting a friend or a family member or whatever an account of their own. But we want to give as much guidance and mentorship as we can to help you guys understand what it takes to be successful. Everybody wants to know what's the difference between the people that make money and the people that don't make money, people that lose money. Okay, it's very straightforward. The people that lose all of their money are the people that risk all of their money. It's really that straightforward. People have a hard time letting that sink in, but I'm going to try to put a little bit of display of what I've learned over the last 7-8 years in managing my own risk. So hope you guys enjoy. But there's a lot of access that you can get from us for funding your trading account or adding a lot of funds to your account. So if you want to add, $100,000 to your account, you should probably check out our website and see what bonuses we might be able to get for you, because there are a lot of them. And if you like having, really cool trading tools, then I would strongly recommend that. It does look like I need to talk to my dev team, because it looks like my SSL certificate thing may have expired on here, but you guys can still get to the site. I'll show this to you guys. But on the premium page over here, this is where all the bonus stuff is. Because I know a lot of people have been asking about this lately. So if you want to add a bunch of funds to your account, send us an email and ask us about what you can get for free. Okay, there's a bunch of stuff on here. We're not going to go through all the nitty-gritty details. That's not what we're here to do today. I'm going to go over to the news page. This is also on our website. Looks like my SSL certificate expired yesterday, so I do need to talk to my developer about that. But you can still get to the site. So this news page is a bunch of news feeds that I actually built in here myself. Okay, I used to do all these Google searches every day just to figure out what's going on with the world. And one of the main things that I want to point out is that, you know, there is also an ebook on here. If you guys want to score all of the news and calculate sentiment, somewhat of a scientific fashion, so you can figure out what economy people are the hottest on and which one people are the coldest on. Okay, I like to play strong versus weak. You're going to see that in here from me a lot. But really, let's get over to the Forex factory calendar right now. Economic calendar. We had Non Farm Payroll come out this morning, just a few minutes ago. And, you know, it's really interesting that the forecast could be, you know, 426,000 jobs created. Would have been amazing. Funny part is that if we go to earlier this week, how many of you are familiar with the ADP US jobs report? If you're familiar with that report, give me a Y in the chat box, or an N if you're not familiar. But, you know, a lot of people talk about the non-farm payroll being the biggest announcement to happen, you know, every month. It happens every first Friday. Looks like a lot of you guys are pretty familiar with it. How we doing, Evan? Glad you could make it. You're late. But anyways, sorry for, I don't want to make too many jokes here, but when we're looking at this, okay, so this ADP jobs report comes out 2 days before the government number every month. Okay, so I'm sorry to call you out, Evan, but this 2 days before. Okay, so this is what you would call a canary in the coal mine. You know, this is really, you know, if you want to get a little bit of an idea of what might happen on Friday, usually, you know, this Wednesday announcement is going to be a good indicator, because they were expecting 400,000 jobs on Wednesday, and we were expecting a little bit more than that by Friday. But, you know, we fell, pretty far short for what the government was expecting. And, you know, all these numbers are pretty weird to look at when you consider the fact that a record number of people in the United States quit their job in November, which really doesn't make any sense. That we could add so many jobs at this pace. So, you know, unemployment being under 4% really doesn't make sense. I don't really know how they're calculating this, but it feels wrong. And primarily for the reason I just mentioned. There's over, you know, JOLTS job openings. There's 10.5 million open jobs in the U.S. That's actually one of the highest numbers in history. So for there to be this many open jobs, and for unemployment to be this low, the numbers just don't add up. Okay, so regardless of that fact, it doesn't matter. People still trust the U.S. government data. So I'm going to go along with that. And let's look at the rest of this week. We didn't really see anything major for any other major economies on here. Maybe we pull up the medium, okay, because this has been all U.S. all week, and most of this news is good. Okay, so that really means positivity for the world economy. Most circumstances, because, well, let's just say a lot of consumers in the U.S. buy things from, well, every other country on this earth. Okay, so all that being considered, we've already seen massive growth in the U.S. dollar. I'm going to get over to the charts. I'm going to pull these up here. Okay, and what we're looking at here, this is the EURNZD. I'm going to get off of this here real quick. I'm going to go over to something simple. Okay, well, the U.S. dollar first, since we've been talking about it, I'll show you guys this first. This is the index I'm going to pull up. So this is the U.S. dollar versus the world. Okay, and let's go to all. And the U.S. dollar has been really strengthening for the last several months. If we zoom in over here, okay, this is the last 5 years or so on the U.S. dollar. I'm going to just squeeze a box on this so you guys can see where we've been kind of living for the last few years, and really where the big price moves have been. And I like to go close to the existing price points that exist also if I can, so I can get a feel for, hey, is the market going to take a break right now? Okay, and looking at this, to me, it seems like the dollar has been on an incredible run. They're telling us that we've got a 3.9% unemployment rate. That's bullishness for the dollar. So that does mean that we could come up to our fresh highs up here. That's entirely possible for us to get up there. Or there's another level here. So there's another right here. So I mean, we could test all of this. Okay, there's really no gospel in the world. We're already past our extension level on our initial fib here. If I come down to a lower time frame on my weekly, okay, but you guys are kind of getting the point. This thing has been on a run. If the dollar has been growing in demand, typically that's a good sign for the global economy because a lot of people use it. Okay, so that being said, you already missed this move. Okay, that isn't what you care about right now. Okay, if you know that things have been going well in the US, okay, and you also know, you guys have heard about the lockdowns that happened in New Zealand. You guys, may agree with it, maybe you don't, but you guys all might agree with the fact that, well, if you open up an economy, which is what we did in the US, and a big reason why things have recovered, then you can expect a little bit of growth. Okay, so what I'm looking at here, this is the New Zealand dollar versus the world for the last 5 years. And what I'm going to do is I'm going to just draw a couple simple lines on here and show you guys what I'm looking at. Here's one right here. Okay, this was the trend for 4 years or whatever. Okay, and we broke that. Okay, looks pretty clear cut. I don't think anybody's going to argue with me that we broke this trend line, especially considering we've been on an uptick since, I don't know, the beginning of COVID madness. You're talking about March of 2020. So that was just a couple of days before the cruise that I had planned got canceled. And, we've been moving up, making higher highs and higher lows since then. And I'm going to show you guys what I'm talking about. The most important things to me to notice when I break a trend, okay, are we making higher highs and higher lows. Here's a high right here, and here's one on the left side of our trend line that's a lot lower. Okay, so we're on the right side of the trend line. We've already made a higher low on the right side of the trend line as well. We haven't quite broken below it yet. We just had a big announcement in the US. We're under 4% unemployment. This is about as strong as the economy has been. I'm going to make a joke since Trump was president. I know people hate to hear that, but it's really true. In February of 2020, we had the lowest unemployment we've seen here in 50 years in the United States, and we are working our way back towards it. Okay, so for all the fear mongers out there, whatever, things are on paper appearing like they're going to recover. So if I believe that this is an uptrend we're looking at here now, okay, the market did make a little bit of a downward push on our NZD this week, but the reality of the situation is this thing could very easily take a much bigger stance upwards, in my opinion. I mean, we've been making higher highs and higher lows. We made a higher low recently on this shorter term outlook. Well, this circle on my left over here, that low is actually lower than this one. Okay, so what that means to me is that we might be ready to go. This might be the time to shine. Okay, so we've also got a little bit of a, some people might call this a crown formation that's happened right here where my trend line break is on this even shorter time frame. So what I'm going to do here, I'll zoom in. We're going to just talk about higher highs. Here's a high right here. Here's a lower one on the left side of the trend line. Okay, so we've got more gaps to fill above as well. My opinion, okay, based on the fact that it's about to be summer in New Zealand and they're probably going to sell a lot of milk and cheese and everything else that they sell there, okay, it might be time for them to pick up, okay, especially if they are really going to go through a period of time where they don't have the lockdowns that we saw last year. We could see some really sexy growth numbers, kind of like the ones that Joe Biden's been bragging about all this year. And really, it's kind of like saying that it's brighter in your basement when you turn the light on. This is kind of the same thing, in my opinion. Okay, so now that we have a bias, okay, what I'm going to do is I'm going to work over to some of these currency crosses. And let's go ahead and check out, let's go ahead and check out the NZDUSD. Let's go here first. Okay, and this might be where I want to make my move. This actually looks pretty similar to the formation that I just showed you guys on the index chart, and a lot of that's because most of the volume is going to be, we're still underneath our trend line here actually, so this is a little bit different. Most of the volume is going to be on the US dollar. Let's go to the all-time frame here. Start from the top, so everybody can understand really what the long-term outlook is like on this thing. And that's really the most important thing, is what's the long-term trend? What are the people that are going to hold for 10 years doing? Okay. And when I say the people that hold for 10 years, I'm talking about the banks, the people that actually have all the money, people that set trend. Okay, this is our outer trend formation, pretty close to it. I could have been a little bit cleaner with that, but you guys get the point. It looks like an uptrend, right? Not super strong, because we're looking at 28 years worth of data, 29. I guess it's 2022 now, but this is an uptrend for a lot of reasons. We got a trend on the bottom that's up. We got a trend on the top that's up. And really, this is just versus anything I've ever been taught. Okay, we've got trend line counter trends that we've broken. Okay, and if we zoom in here, this thing could come down, could come all the way down. There's really no gospel in the world. Doesn't matter really necessarily what you think. It matters what you can protect. Okay, and really, this thing has been up for most of the last, I don't know, couple of years. We're at a low price. If I go ahead and pull my fib here, I want to check to find out where we are. We're right around our 382 level on our monthly time frame. Let's come down to the week and just work our way down. And really, this is how I like to go about finding an opportunity. I'm just going to, kind of wind my way down and figure out where the biggest shot might be and where I can protect myself the most. And right here, it looks like we're at, wave 3 here. So even if this thing pushes sideways, then I've got a pretty big opportunity if I just put a stop loss right here below my AB boundary. I'm going to put a blue line on my current market price. Okay. We haven't broken my stop loss since summer of last year. Well, really summer of 2020. So I'm fairly confident we're not going to those prices. And we could, don't get me wrong, we absolutely can. The market can do whatever it wants. But from this blue level, if we bounce now, I've got an opportunity all the way up, well, to considerably higher prices. We're talking about all the way up here at our green level would be conservative. I think I changed the color on one of these lines. I want to change back. We're going to go back to blue. Okay, so even if I go to green, I'm looking for a really big opportunity here. Okay, this is if we make a new high. Okay, and there's pockets up above here. The market has been to these prices. Okay, the point is that it wouldn't be surprising for us to get into this demand zone. Like, realistically speaking, do you guys think that if people paid these prices up here for as long as they did, we're talking about many years, they were in this range, okay? And that was from 2011 to 2015. We spent 4 years of people paying those prices, okay? Interesting part is that was during the Obama administration, and we have his vice president in office here in the US right now. Okay, so all those things being known, wouldn't be surprising for us to get back into that range. Okay, not to mention New Zealand is a very low debt economy compared to most of the others on the planet, and they are kind of, well, let's just say they kind of started the movement with the inflation target, and every major economy on earth kind of followed suit, and it's been that way for the last 30 years. Most people don't know that. Okay, so all those things considered, New Zealand's pretty sharp. This is really what I'm expecting. And, the thing to understand is how much risk is this? Okay, from our current market price to where I've got my stop loss, you're talking 250 pips. Okay, so this is a big position trade. I'm looking for 850 on the top. Okay, so this could be a very large opportunity, could be a 250 pip loss. So I need to understand how much money that's worth to me. And, if you're trading an account, how many of you are trading an account with less than $1,000? Give me a Y in the chat box. If you're trading with less than, we'll call it less than $2,000. If you're trading with less than $2,000, you don't have to tell me if you don't want to. I'm just trying to help you guys out. Okay, no one else is going to see these but me. I'm not going to call anybody out. Okay, so if that's the case, okay, you don't necessarily want to make a mini lot trade, from my experience, if you could lose, $250. That's more than 10% of your $2,000 account. Okay, you could trade maybe a 0.02, whatever. You could do all sorts of things. But what I like to do in this situation is start with a 0.01. Okay, if you're trading a lot more money than that, if you have 10 times as much money, if you have 5 times as much money, I'm going to make this real easy to figure out, because I'm going to show you with a 0.01. Okay, so with a 0.01, okay, if I'm going to risk 250 pips, okay, that's roughly $25 on this trade. Okay, that's a $25 risk to try to make I don't know, something around 80. Okay, so $885. I'm gonna risk 25 to make 85. I don't have to win trades like this every time. Not even close. I have to win maybe 3 times out of 10 to break even. And if I'm better than 3 times out of 10, and I think I am, then, you know, because the market only goes up or down. There's only 2 choices. So even if you just bought every time, you're almost 50%. So, I mean, end of the day, okay, it's really about what I can risk. And, you know, if I'm wrong about this, I need to win somewhere else. So 850, whatever. Okay, obviously, if you have a larger account, okay, and you want to have a more impactful experience, okay, then you can do that pretty straightforward, easy. Okay, if you're trading $100,000, I tried to open up another live account, but I got to wait 5 days for the money to clear, which I'm kind of annoyed about. Because I wanted to show you guys a fresh live account so I could trade this prediction with you guys, but we're gonna have to do it with the demo for today. I'm gonna get the Wave Rider automation on it later. I might actually show you guys that if I can during this presentation. But for right now, I'm just gonna go ahead and open it with this. Once we get done with this here and I have time to figure out a way to get cash in there right away, I think I can with a debit card, then I will have that loaded and I'll hopefully be able to share that FX book with you guys in the Facebook group. If you guys aren't in the Facebook group, then you should be. If you're not in the Facebook group, just send it email to brokers@123Trade or the Discord server. You know, transfer me some XRP. I'd love that. Absolutely love that. I think XRP is hot for a lot of reasons, but I don't think that's a very profound statement. But I'm gonna go ahead and click on buy here, just so we can start tracking this. Let's actually, for all intents and purposes, this account size, if you have $100,000, you know, that might be a situation where it makes sense for you to trade a standard lot position here, because $100,000, 2,500 bucks, you're risking 2.5% of your account. If you're going to be less cavalier than that, you might do something like a 0.5, 5 minis, and click buy. And the reason why you might split your order, even if you have a huge account or a regular account, whatever it is, $100,000 is not a huge account to some people, many people. But that being said, you know, if this thing comes against me 100 pips, I can get in at the better price as far as I'm concerned. Okay, so at this point, I'm in like Flint on this one. It already happened. Okay, so I don't have to do anything else here. I can come back and check this next Wednesday if I want to, and I don't have to care because I'm okay with risking the amount of money that I'm risking. Okay, this is just your thought process. This is kind of what the gymnastics you got to go through. Okay, it's just to figure out, am I okay with leaving this? Because if you're not, then don't click buy. Okay, it's really that straightforward. That's how my thought process goes on all these. If I go to the EURNZD, because I know that I already like the opportunity on the New Zealand dollar, okay, I know that this has been a downtrend for quite some time. This could come up. There's no gospel in the world. Let's go to the all-time frame here. Crunch this thing down, see what it's been doing for, you know, a long time. And let's draw some lines on here because that's that's the right thing to do. A lot of people are going to skip steps like this all the time. If you've drawn these a million times, it gets kind of redundant, but that's kind of how you want it to get. Okay, so I showed you guys the USD, well, the NZDUSD, and we were looking at an uptrend. I've got the same outer, you know, what I like to call divorce lines, you know, the lines that the market hits and doesn't come back for 10 years. Okay, I've got those same lines drawn. This looks like a downtrend, right? Pretty straightforward. Okay, so that being said, okay, I don't think that there's a reason for me to believe that this thing is going to go up for a considerable period of time, especially considering that the government, well, the central bank in Europe has been talking about more room for lower interest rates. And then I look at this technically, okay, and we are struggling to break this downtrend. Okay, struggling to break it. We haven't necessarily confirmed here yet that we are going the long way down, okay, on this outer trend. Okay, we have already on this inner trend that exists right here. Okay, and the other thing that I want to point out, everybody wants to know about trends and where do I draw my trend lines? And you know, you guys have to understand that the trend line tool, okay, the box, all this stuff, the whole purpose of having these tools is to find a pattern. And here's a pattern right here. There's a high price, there's a lower high price, here's a lower high price, here's a lower high price, and realistically speaking, okay, we zoom in down here, this is a lower high price. If we don't close higher than this candle here today, then this is a lower high price. Okay, so if I go to my day chart and work down even more, I've already got a lower high price, okay, than this one right over here that formed. Okay, so my pattern here is that the market makes highs, it tries to test the highs, and then it's been falling, and that's just what it's been doing for quite some time. Okay, so what I want to figure out is where can I manage my risk, and does it make sense for me to try to sell it right now? Okay, does it make sense for me to buy it right now? Okay, it really could go either way depending on what phase of this trend that we're in, because again, a counter trend move could go for weeks. How many of you guys have looked at a downtrend, got it in as a seller, and then it went against you for 2 weeks and you lost a bunch of money, and then maybe it went the other way? I'm going to do the pound. Oh, you can bet, Tamaz, I'm doing the pound New Zealand. Hey, we'll have time for that Aussie USD also. That's going to be pretty similar, I think, to the NZDUSD. But so what we're looking at here, okay, we're still on our EURNZD. Okay, I'm going to give a little bit more real estate here. We are just about working our way up towards this 382. Okay, my opinion is that we might come up and test this 382 level and fall. And what I'm talking about with the 382, just so you guys can know what I'm talking about, this is the 382. Okay, this other red line below here would be the 236. Okay, and then we've got our 50 above here, our 618. Everybody's favorite number is the 618. If it gets to the 618 all the way up here, okay, I definitely want to be a seller. No question on earth if I want to sell right there. Okay, obviously we're going to be a little bit more aggressive at the lower price. If I come down to my 4-hour time frame, zoom out a little bit more, crunch this down, find something I can actually use. But here we go. We're going to go relatively conservative on this first one. Actually, I should probably show you guys the long-term move that I'm looking for before I get into today's opportunity. Okay, so just to give you guys an idea, okay, let's come back to our higher time frame where I really think this thing is headed. Okay, let's clear this stuff out. I'll come back to this in a moment. Okay, I want to keep this chart as clean as possible while I show you guys the long-term opportunity that I believe exists here. Okay, because if we're looking at this, we've got some unhit targets below here that I really, well, let's just say really believe can get hit. And really the number one that hasn't been hit, that the market's been trying to hit, is right here. Okay, we haven't hit that. There's a little price pocket there, lots of market turnaround. We haven't touched it. Okay, that's very far away. The other thing that I like to pay attention to is that this area right over here. Okay, how many of you are familiar with supply and demand? If you're familiar with supply and demand, put a Y in the chat box. If you're not, really is really what I need to know. If you're not familiar with supply and demand, look, give me an N in the chat box, and I'll give you guys a little bit better idea. Look, a lot of you guys are fairly familiar, okay? But just looking at this, okay, we've got lots of demand. Well, here on this chart, these are higher prices. This would be supply, okay? So if you've got lots of movement, we stayed in a range for quite some time. This is what would be called supply, okay? So that means that essentially the price is likely to fall if it tries to get back in this range, and it has already. That already happened, okay? So that area existed. The market broke to the south right here, came back, tried to get back in that range, and fell like a rock, okay? So if the last time we got out of this range and tested this range, it fell like a rock, I'm going to expect that the next time we test this range, like we are right now, it does something like that. Okay, so really the main thing is that there's been lots of supply at these prices for many years. I mean, these aren't new prices that happen. Okay, if you look all the way back over here, we've pinballed between this range many times in the past. This might be, some people might call this a pivot. Okay, if I zoom out more, I'm going to pull this all the way over here. Okay, these prices we pinballed in for the last, I don't know, 5-6 months were important for the last decade. Okay, and really it's kind of a, really kind of a pivot point for us, it looks like. And really our overall range for that last decade is all the way out here. Two of my favorite tools are the rectangle and the line, okay? So this is really our 10-year range that we're in. It goes a little further. I kind of cut off the crusty edges. You know, I don't cut off the edges on my peanut butter and jelly, but I will on a 10-year trend. So that being said, okay, if I get rid of these nasty red marks that don't look the same on this higher time frame, once we're zoomed out more, to me it looks like we've got lots of room to come and check out some demand prices that look at that exist at lower levels. And we've been trying to test this pocket here, we haven't hit it. So we're also getting lower lows. Okay, we're also getting lower lows, just to show you guys what I mean. Okay, this looks like a low, right? Here's another lower one, and here's another lower one. That seems like a trend. Okay, I already showed you guys these ones on the top, these lower highs that have been happening. So I'm just going to be looking for a new low right here. That's really what it is. It could take a while for it to get there, it could never get there. But at the end of the day, none of that stuff really matters. It just matters if I can manage my risk. Okay, as far as for me making a decision today. Obviously, I'd love to win every single trade that I ever place, but you know, if that's the pipe dream that you're trying to smoke out of, then you should probably give up on it. Because the point is, you don't have to be right if you manage your risk properly. Okay, the number one problem that most traders have is that they have to be right. Look at an opportunity and they're going to say, you know what? You know, if I win this trade, if I win this one trade, this is going to change my life. The truth is, if you're doing something like that, it probably will change your life in a way that you don't want. Okay, so there's plenty of opportunities. We can go look at 20 more charts today and I can find 20 more trades. Okay, wouldn't be a big deal. Okay, we can find 20 more opportunities today. I don't care about any one trade that I make enough for it to change my life. I care about all of the decisions I make because I know that the aggregate of all of my decisions can change my life. Okay, so I don't have to make all my money on one trade. Okay, I want to do it on all of them. Okay, I want to be able to lose a trade and not have to sweat. Okay, and I think that's a very salient thing a lot of people need to understand. But what we're looking at here, let's measure this. Okay, so right now, current market price to where my stop loss is, price that hasn't been breached since December of 2020, okay, is where my stop loss is. This is 430 pips away, 440, okay? So this is very far. Okay, some people, I'm gonna reel this in a second and show you guys how to find a shorter term opportunity with fewer pips, but this is about a 2-to-1. I'm looking for 850 on the bottom side. Okay, so this is a big ass trade. I don't know how else to put it to you guys. I'm looking for a lot of market movement. I'm using a lot of data to make the decision, and I'm allowing for a lot of play. So if I want to get into something like this and I've got a $1,000, $2,000 account, less, whatever, well, one, if I have less than that, I may not want to get into this big of a position anyways. But if I risk a 0.01 up here, a micro lot, this is a $43 risk, 40 bucks. Like if you're getting into investing and trading and trying to make a lot of money and you're worried about 40 bucks, then you really need to save more money before you go crazy trading. Okay, I don't know how else to put it, but $40 shouldn't be a big deal in the world of investing. Okay, so that being said, if I put a 450 here, that's about what I would be risking if I did something like that. If I put an 850 down here on the bottom, we'll just call it 800. Okay, an 800 pip win would be pretty happy for a lot of people. Even at a 0.01, you're talking about $80 roughly. Okay, so that's really how that works. If I want to risk more, if I want to risk twice as much, okay, $90, I would do a 0.02. Okay, if I've got a $100,000 account in here, I might do this 0.5. I might do $5 a pip. And really, I might want to do less than that because I might want to do a 0.25. Okay, because this is twice as many pips as I risked on my other NZD position, and I want all of my decisions to have kind of the same amount of weight. This doesn't need to be a much bigger decision than my other NZD trade that I made this morning, so I'm going to keep it that way. I'm going to click sell. Okay, and it really the most important part of your process is figuring out how much money to put into the position. Okay, and if you're looking at this and you're saying, well, I'm not really comfortable, being in a trade for the next 3 weeks, 3 months, which is how long this might take to progress. Okay, I'm not comfortable doing that. Okay, you don't have to. Okay, you don't necessarily have to stay in this for very long at all if you want to take a position like this. And really, there's a lot of opportunity for you to get in closer. Okay, so now that we've done this bigger term, I'm now on the 4-hour chart. If you want to look for smaller term opportunities, just look at a smaller chart. I still want to look at the big charts first so that I can understand what the risk might be. But the reality is there's another trading opportunity that I can get somewhat 2-to-1, it looks like, right here. I don't have to look for this big giant move that's going to take a heck of a lot of time. All I got to do is whittle down, okay, to a smaller time frame. And reality, I'm expecting the market to get down and test these levels down here at this price pocket. That's really where I want to trade to. Okay, so if I want to aim there, I've got a lot of opportunities. I'm going to show this slightly bigger trade before I show you guys this smaller one. But I've got a couple of highs right above. You guys can see those other highs I'm looking at, pretty obvious if you turn on your smart resistance levels up here. So I've got a bunch of highs. I've got 1, 2, 3, 5 levels of resistance before we get to my stop loss. Okay, my long-term stop loss, I've got 8 from this 4-hour chart. So I'm really confident that my long-term move that I just set up there is not going to get popped. But, I've got this much shorter term opportunity, doesn't rely on this thing making a new low. This is actually a much higher probability trade to actually complete. And realistically, your risk is much smaller. Okay, no matter what lot size that you're trading, you're going to have smaller risk when you're risking 200 pips instead of 400. Okay, so now it's possible to make this a $20 risk instead of a $45 risk. Okay, so that's really, you need to be able, if the shorter the time frame, the bigger you might be able to trade, but everybody needs to keep things in perspective. It's not so much about the lot size that you're using, it's about how much money are you risking, and are you okay with that? Okay, so that's the part everybody needs to understand. How much money am I risking, and am I okay with that? Okay, that is the most important thing for everybody to understand, and there's an even shorter term opportunity. If I come down here to my, say, 1-hour chart, okay, we've been whittling this thing down. Some traders are going to look for this sideways trade because they're going to look at this right here, this box. Here's my favorite tool. Okay, here's a box. Okay, we've got a top and a bottom of this box, don't we? Seems like it might be pretty easy for me to make a decision to do something like this. Okay, and just trade towards the bottom. And I've got plenty of opportunity in the world for this thing to come back to the bottom of the box. It's been doing that since, I don't know, the last month. More than that, the last 5-6 weeks. So all things considered, this could very easily just do the same thing. Yeah, hopefully we can get to gold here today, Daniel. I know that's let's just say an interesting one for a lot of people. Interest rates are likely to rise. So I'm not as bullish on gold as I had been, but the tapering that they talked about here in the US has not really happened. They're still printing 120 billion per month. With their quantitative easing. Their quantitative money printing is really what that is. Because they need to keep enough money in the system so that people can still make withdrawals and not freak out that the banking system globally is a Ponzi scheme. So that's why they do all this money printing. That's what that's all about. They need to make sure people can get money out of the bank when they want it. And for that to be possible lately, at least it seems that way, it's really got to be something that they print all this money. So pound New Zealand. Okay, let's get there. I think you guys have seen enough of this EURNZD. I think I just showed 3 different ways to trade that one. Okay, this is the pound New Zealand. This thing has been an uptrend, okay, on this hour chart for quite some time. Let's go to the all time frame. I'm gonna get rid of my order window so we can do our due diligence here. Crunch this thing down. It looks like a really aggressive downtrend when you've got this broad range of prices. We flatten this out. It looks a lot more flat. That's what happens when you flatten things, I guess. So what I'm going to do, crunch it down. I want the 10,000 foot perspective. Loose change for, oh, you guys are killing me. All right, so let's get some lines drawn here. You're going to see me do the same thing. Okay, I'm going to start left to right. Because that's the way that time works on the chart. There's our left to right. That's our top trend. Okay, this is going to look pretty similar, I think, to the EURNZD because those are very heavily coordinated. correlated, whatever you want. I almost just rubbed both of those words together. But this is what we're looking at, okay? This is what it's been doing many years, okay? This is 20 years of data we're looking at. Let's come down to the weekly. I don't have enough information to make a decision yet. It's making a scream upward right now. Since the Non Farm Payroll came out this morning, that doesn't necessarily mean anything to me, because what I'm looking at long term, this looks like a downtrend, okay? And if you guys are looking at this here, the things that I like to pay attention to in figuring out if something's an uptrend or if it's a downtrend, is it taking longer to move up than it is to move down? You guys see how quick this thing fell from our high over here? See how quick we made that bottom? That's when the referendum happened for Brexit. And we created this new low down here. And then for the last 4 years, while we kind of like wasted our time trying to figure out if Brexit was actually going to happen, we creeped up, okay? And it took a lot longer to do that. So this is our up move over here. And I'll make this a little bit more obvious, I think, if I just make this this one box here. This is our downstroke, okay? Our upstroke is this much fatter block that took a lot more time to happen. A lot more time. And the interesting thing is that we did start making some lower highs after that point. So I'm going to get rid of these boxes. These are kind of useless for me as far as making a decision right now goes. And I'm going to go ahead and draw another inner trend line here just to take a look-see and see what we got here. Okay, so this is what I'm looking at right now. Okay, so to me, this thing is already trying to break out further to the south. It's having a hard time doing it, but the UK came out and told us they had $1 trillion export plan. If they want to do that, well, let's just say they're probably going to have to devalue the pound so that people can afford to spend more pounds. Okay, otherwise, I don't know how they're going to get to $1 trillion in exports other than by driving down the value of the pound. Not the move that I would have expected them to make, but you know, that's usually what these central banks do. So like I said, doesn't matter what your opinion is or what you think. It does make it easier to find an opportunity if you're smart. But that being said, you know, you don't necessarily have to be. Okay, if I come down to this lower time frame here, I drew all these fancy lines and stuff. All this stuff looks ugly on our low time frame. I'm gonna draw a box on our nearer term. This is the last few years here, okay? And really, I just want to know where the market's been turning around, okay? I'm going to make this a little bit more translucent so we can actually see what's going on. Okay, so here's our box. And we might tighten this up a little bit. I just want my box to be at prices where the market has turned around recently or many times, a price that the market's cared about a lot. Cool part about the one that we're at right now, I'm going to make this actually gray so that I can use my yellow circles and you'll actually be able to see those. But we've got lots of highs and lows on our box here. Okay, there's a couple of them right here. Here's another time right here. This was an impactful time for it where we formed a price pocket. More price pocket activity right here. Another high at a similar price right here. Another one here. You guys get the point. Okay, so this has been a great price to sell or buy because the market turned at this price, and I don't get to decide where the market turns. I just want to get in at those prices. That's really all I want to look for. Places where the market has turned, okay? Because if it's turned there before, it might do it again, okay? All things considered, this being what I consider a long-term downtrend, and this price that we're at right now is really one that was very important for when the referendum happened right over here. This is the referendum, and the, I don't know, how big is that price range? 1,800 pip price range that happened in a day on this candle. One day, 1,800 pips. The market fell from, a little bit higher than this. This range where we've got this supply zone where the market fell like a rock the last 3 times it's gotten there. So I think fourth time is again the charm, and I want to do this again. Okay, so I'm going to come down to the 4-hour chart because I can. I think this thing's got legs to come much lower. Okay, let's see if we've got a place where we can manage our risk. I'm going to turn on my smart resistance up here. Maybe I got to come to the day chart to get that for us. And here it is. Okay, so my R1 is much higher at 202. I think it's 150 pips away. Okay, let's get a red line up top. Okay, and there's a lot of ways you can look at this. I think that we've got a downtrend. Okay, I don't necessarily have to trade it like a downtrend because I've got a lot of room in the range. And what I mean by in the range, if I look at my current market price, where we are right now, okay, and I also go ahead and let's get another line on here where I might put my extension. I really only need a 2-to-1, really, so I don't even have to go all the way to the bottom of this thing. As far as things go, I really could come to the bottom of this, and really the opportunity in my mind is that I could get all the way into this lower range, and I could have targets as low as all the way down here, okay, because we've got demand zones down here that we haven't hit. That's thousands of pips away. So I want to make sure I showed you guys this overall overarching opportunity that I'm looking for, that's 2,000 pips away or whatever. This is really huge, to say the least. It doesn't necessarily have to get all the way there for me to be successful. And if I want to trade all the way down there, I can. It's a little bit more difficult to manage for a lot of traders because you may be in that trade for, I don't know, the next 3 months, next 6 months. Not everybody's got the patience for that, because a lot of people look at Forex and they think, oh man, I have to day trade. You can, because it moves every day and there's lots of leverage, but you don't have to. I mean, because the reality of the situation is, we've been in this session for 45 minutes. We're up 20 pips right now. Some people aim for 20 pips a day. You might only want to trade for this amount of time. You might just close out all your positions and call it a day right now. Come back tomorrow and look for a new one. I'm lazier than that. I want the market to work for me. I'm not going to do a damn thing with this until next Friday's session. I might close out. I'm not going to look for new opportunities until next Friday. I'm going to close out opportunities and take profit, but I'm not going to do much else. And I think that's pretty lazy. I think that's really what I want. So let's measure this here. See how many pips I've got at risk. 238, very similar to the first trade. Trying to get 500. Sounds sexy to me. So I'm going to trade it just like I did the first one. Okay. Say 238. You might actually do 250 just so we can do a straight 2-to-1, 250. And I'm going to look for 500 pips. Okay. I'm going to go ahead and click on sell. Okay. And this is a half of a standard lot position that I put in here. Math wise, that makes sense for $100,000. For less than that, probably not as much. If you're trading something under $2,000, I might look at trading something like a 0.01. If you're trading 2 to 5, I might look for something like a 0.02. If you're looking to enter more than once on any of these trades, obviously I like to cut things in half. Okay, so it's really about understanding how much am I risking in a trade, and am I comfortable with that? That's really what this comes down to. So I've got a few of these trades open. Okay, and I know that there's a few more that I want to show you guys. Let's get to the NZDJPY. And right now, let's go to the all-time frame. My favorite, all of the information. I don't have to get the Twitter synopsis. I can look at all of the data. I can look at everything. So here we go. Here's my top line from the left. Okay. This one, okay, this is really what we've got going for the last several years. We've got a little bit of a different scenario. We've got a sideways movement on this because we've got downward pressure on top, upward pressure on the bottom. I like the feeling of sideways. The other thing I want to point out here is this really amazing dark cloud cover that exists right here. If you guys are into the whole pattern thing, that's a dark cloud cover. Very clear cut. Okay. And a lot of the reason why that may have happened there, we've got some pretty impactful prices at that level. Okay. Just go ahead and show that. Okay. We had lots of times in history where that was an important price. I'm going to make this red. Okay. Because that I'm probably going to use as my stop loss. Okay, and what I want to do, since I know that this looks like a sideways trend long term, I want to trade it sideways in the shorter term. Okay, so all things considered, this has been an uptrend, but we've got this trend break that happened. Okay, we had another one of those that happened many years ago. Here's one of them here. Okay, and this thing made a big move up. It could make its move upward, but Truth of the matter is the U.S. economy is performing, and what that means to me is that we may see some weakness in the yen. The other thing is that oil, my opinion, could come up even higher. Now, a lot of people are talking about $100 oil. We'll show that here in a second. But if oil goes up, then let's just say Japan's an island. You do the math. Okay, if they're the third largest economy on Earth and they have to send everything that they sell, export, on a ship somewhere, they're probably going to pay higher gas prices if oil goes to $100 a barrel. A lot of people are looking for that sort of thing. So, looking at this here, I work for a company called 123Trade. We haven't done a backside test here yet. Okay, so really, there's about a 90% chance you check your 236 level. We already did that. We have not tested our 382 level below, and there's typically about an 80% chance, based on what I've learned, that we get down there. Okay, so if I come here, draw my current market price, I'm showing you guys, basically this is a counter trend move that I'm showing you. Okay, at least in the short run. Okay, this would be a counter trend move, but in my opinion, very large opportunity, and something I don't see any reason why we can't see these prices again. Especially if we see a little bit of a resurgence with New Zealand as they open their economy. Omicron doesn't seem like it's putting the fear into people like Delta might have last year. So that's more of a risk on type of thing that we might see in that scenario. Let's come to the week time frame. A lot of people freak out when I make decisions on the monthly time frame, but I don't really care about the lower time frame if I like what's going on the high time frame, because I'm using more information on the high time frame. And this is our lower time frame here. You guys see that trend line break with the backside test? That looks sexy to anybody else? Do you guys like this setup here? Do you like this opportunity? Give me a why. Because I've showed you guys a lot of things here. We've done a lot of analysis. Do you guys like the opportunity on the right side of this trend line? Yeah, me too. And the primary reason is that the risk reward's solid. Okay, so all things considered, this thing doesn't have to come up. We've had a lot more trend line breaks. Okay, I am technically trading this, as I mentioned to you guys before, as a counter trend move, but we've got lots of demand down here that never really got tested. We never came down and hit the 618 level for sure. We never hit the 382 on the higher time frame. Okay, so nothing goes straight up. And if we think that the world might be less scary for a couple of months, well, I'm going to bet against the yen in most circumstances. So if I'm looking at this, the U.S. unemployment's under 4% for the first time in over a year. We've got a 400 pip risk here to try to capture something like 650. Okay, so 400. I'm going to reel this in. I'm going to show you guys a shorter term opportunity here in a second. Okay, 650. And I'm going to trade this one a little smaller because it's bigger pip count. I'll do this 0.25. So I want to keep all my decisions kind of the same size, so none of them matter more than the others. Okay, if you're trading a small account, you might want to do like 0.01, 0.02. Trading $10,000, so a lot of traders are going to do something like a 0.1. It's all relative. Okay, so really doesn't matter. I like to risk less than 3% of my entire account on every trade. Less than 1% is really better. The real pros are risking less than 1%. The best traders on earth, they're risking less than 1% per decision that they make, bar none. They're looking to make 7% a month. You do that, let's just say you're going to be killing most of the world. You don't have to make 100% a month to kill every other investment around. But let's keep on moving here. I'm going to go ahead and click on sell because I want this longer term opportunity. I want to see what happens with the longer term move. Okay, and now I'm going to come down to my, say, 4-hour chart. Okay, and the cool part about this 4-hour chart, I'm going to clear out all my other stuff here. I already have a bias. Okay, I already did my long-term analysis. You guys watched me do it. Okay, I already think this is a downtrend. If I pull a trend line here, oh my gosh. Looks like we have a broken trend line. So, and the cool thing about this one is we get a lower low. Okay, this is the most important thing. I want to check my trend line breaks. I want to see if they make sense. Do we have a true crown here? Okay, I've got a lower low on the right side of my trend line break. So what that means to me, this could be a crown formation. This could come down a lot. Where's a good place to get in? You know, I'm not going to enter this one as well because I got in the longer term. But right now we're really kind of early. So what a lot of traders may do, they may enter this now. You may enter it twice. Some people are going to wait to get into the 618 level where we might see a backside test on this trend. Okay, so 618 when it comes to risk reward is ideal because I want to have my stop loss outside of my AB boundary up here and my extension level below. We'll make this green so you guys can see that a little bit better. But essentially this is what I'm looking for. Okay, risk reward on this trade is great. Okay, if I'm worried about missing this trade, then I might just split my opportunity into two and get into it right now, and then plan to get into it again later if we get up to my 618. You know, for those of you people that suffer from FOMO, that's how you might do it. You know, for those of you that want to be less aggressive and don't care if you're in this trade or not, you know, which is not a bad way to be, because I'm not going to do it. You know, not to say that it's a bad idea. I already decided to get into the bigger position, and there's a good chance that a heck of a lot of people are going to see me trade this account. So let's just say I want to be as responsible as I know how to be on a tracked account that I know thousands of people might look at. Okay, so in your account, Elizabeth, depending on what country you're in, yeah, you can trade gold and oil, and I'm going to show gold here in a second. I'm going to show gold here in a second. This is what I'm looking at on the NZDJPY. Okay. I had some people ask me for the Aussie USD. I'll show that real quick. Okay, I am running out of time. We've got more opportunities coming, but this Aussie USD, you know, for all intents and purposes, okay, it correlates very heavily with the NZDUSD. So I am already biased to the south on the NZD, so I'm going to also be biased for the Aussie in the short as well, and for a lot of reasons. And maybe look at this 4-hour time frame; it's been on a downtrend for quite some time. Okay, this is all the way back to February. Okay, so if I'm looking at this, this is the you know, really where I'm living. Okay, this is what I'm looking at on the Aussie. Okay, I'm not expecting us to get out of this range anytime soon, so I'm looking for downstrokes. And really, this is just a pattern that I'm looking for more so than anything else. I'm already biased to the south. Okay, so every time we break one of these counter trend moves, I'm looking for sells. Okay, and there's lots of them looking for sells. Okay, I'm looking for sell here. Okay, so that's really what I'm looking for. Just looking for sells. Okay, so Ross, I did until I broke my IG account and I dumped it. I moved over to Oanda. And I tried to load it this morning, but I apparently have to wait 5 days for an ACH with them, which is really annoying because it's let's just say if I pay for something with an ACH anywhere else, typically it's instant. So I'm really kind of annoyed with that. I wanted to trade that with you guys live this morning. With Smart Trader, I don't see gold or oil. It's not going to be listed as gold or oil. It's going to be XAUUSD, Elizabeth, in Smart Trader. And if you can't trade it in here, it's because your broker symbol is different than what's in Smart Trader. But I'll show you guys how you can open that here in a second. I won't be able to do it with my account because I'm in America and they don't let us do that here. But primarily, this is what I'm looking at on the Aussie USD. Okay, I don't want to get too far off track. We're running out of time here. I'm going to go ahead and pull a fib here. Zoom in a little bit more so I can do it in the right place. And I just want to get from the top. That didn't happen for me. Let's try it from our most recent wave, maybe. All right, we're at the 236. Okay, so I've already mentioned to you guys that the 382 is about an 80% hit. That's right up here. Okay, so that might be my first entry point on this if I am looking to sell. Best entry point would be at the 618. Could take it a few days to get there. That might happen Sunday. Who knows? May never get there. May fall like a rock immediately because this thing already did break out. Okay, so I'm already bearish. Okay, it already broke out. It's made a lower low than we had on the left side of our trend line. Okay, so I am bearish here. My stop loss, I'm going to want to keep outside of my most recent AB boundary, above, and my exit price, at least in the short run, I may look for something like this. Okay. So some people are going to be aggressive and want to get into this right now. I don't think that necessarily makes sense for this particular position. I think I might get in my 382 as a seller, and that'd be a pending order position. I want to go ahead and show as much as I can before we get out of here. So I'm going to keep rushing. Once I show you guys these positions of what I'm looking at, GBPJPY, this one does look like we've got a crown up top. What I want to see is a trend line break to go along with it, and it does look like that just happened. So this might be a sexy time to sell. Really kind of, some people are going to wait for a lower low on the, we haven't really gotten confirmation of this downward move yet. Really what you'd want to see is a lower low on the right side and a lower high. Okay, so really the best place to sell this thing would be right over here. Okay, you don't have to hurry up and get on it right now. Some people like to call tops. Okay, I like to avoid doing that if at all possible, unless it makes sense money-wise, and here it might, because we're kind of at a multi-month high. I'm going to clear this out. We're very sideways for the last 1, 2, 3 months. So 4 months in a row of sideways could happen if 3 months already happened. Reality is this thing's been an uptrend for many months, but it's been a downtrend for longer. Okay, so if you guys look at these big nasty falls here, some people look at this and they think dead cat bounce, because this fall was very big. This one was almost as big, but this is what we're looking at here from the top. A little bit of a trend line break. So who knows? Could be big. Could come up big. I think we're in no man's land. I think we're in sideways territory. As far as this GBP/JPY goes, I might be a little bit afraid. When I say afraid, it would be to call a trend, because I don't think we have a trend right now. The trade to make, my opinion, is a sideways move, because that's been what's been happening for the last few months, as indicated by this box here. Okay, so I don't want to try to get out of this box. I'm probably not going to want to have my stop loss any further than somewhere like my previous high over here. Okay, current market price. There's lots of trading strategies in the world, people. A lot of them work. Really just kind of depends on where you use them. But if I want to get back into my demand zone or just get a 2-to-1 on this opportunity, I might look for something like that. Okay, I'm going to get rid of my box here so that's more clear. But really, it's just a range trade. And nothing crazy complicated about it. Okay, this is my most recent AB boundary. Okay, just to give you guys a little more clarity, this is the most recent AB boundary that I've got. Okay, so really I'm just looking to trade back to the middle. I might be less cavalier and trade back to the 382, tighten up my stop loss. And really this opportunity here, from a risk reward standpoint, not crazy big. Talking about 140 pip risk to try to capture something like 200 on the bottom side. So that's really what I'm looking at on the GBP/JPY. Let's get into the gold real quick. And if you want to trade gold directly from Smart Trader, if you have your AvaTrade or your Place to Trade account hooked up or whatever it is, then you're going to have to click this button here and scroll through the available instruments. It'll say gold or silver, but you just have to click and scroll down. I'm not going to be able to do that because I'm not allowed to do that in the US. As far as things go, let's go to the all-time frame for gold. And really what might happen on gold, considering that we're planning on raising interest rates 3 times this year, and I know a lot of people don't want to hear this because there's a lot of people that think gold's going to go to the ceiling. I'm not necessarily in that camp anymore. And really it's because there's a lot of demand down here at considerably lower prices. And, really the market's been making downward moves. That all things considered though, that doesn't have to happen if I crunch this down. Okay, here's our line on the top. That's an uptrend. Okay, here's our line on the bottom. That's an uptrend. So we may never get back down to this zone. Can we work towards it? I believe we can. And the reason why is because the last time we had a major issue, back in 2008 to 2011, we had really crazy inflation and printed a ton of money. That was over here. Okay. That went on for a period of time and the market fell because they started raising interest rates in this period of time. Okay, so if I copy that over here, same amount of time on this other, rise, fall, it could be go time to the south. Because the last time that this sort of thing happened, we fell, several $100s on gold. So I really think we could come back down and test the lower side of our channel. Long term for gold, I'm bullish. So when it comes to buying physical, all that type of thing, in 10 years, do I think gold is going to be up? Yes. The Warren Buffett methodology of thinking is, in 20 years, is it going to be worth more? That doesn't matter to traders, I don't think. I think you're probably more concerned about today and next month and tomorrow and all that. So let's come down to the weekly. Looks sideways to me. So really, we need to find a breakout here. Something's got to give, okay? And we've got a pennant that had formed here that we broke out of. So we could come up. Some traders might draw these pennants different, okay? Some people might have this drawn like a so. Or you may even be looking at it this way. Everybody's got a different pair of eyeballs. This part you guys don't understand. Okay, this is really the closest, narrowest one that I could draw. So if I wanted to look for confirmation of a direction, I really need to look for a breakout. Based on what we got right now, it would need to be a test. I would want to sell from this price. The right side of my V over here would be where I would want to sell from. Okay, as far as where I might want to buy from, that might be from here. Okay, from this top side. Okay, I would want to buy from this price. Okay, this is where I would want to buy. We don't have either of those right now. So I don't really have a bias at this point, okay, because I don't have confirmation to the top or the bottom. And trading is all about confirmation and trading with the trend. That's what confirmation means. Am I trading with the trend? So I come down to the day chart. Okay, this is the place where I might be able to make a decision, and really just for a sideways move. Okay, nothing more than that in my opinion. I'm going to come down to the 4-hour chart, see if I can get a better look at something like that. This thing's kind of a falling knife right now. I wouldn't do it. I wouldn't do anything with this right now. I'm going to wait for really a better place to buy if I'm looking for sideways, because my most recent range that I'm in is kind of there. And if I'm going to look for sideways, I want to buy at my blue and my green levels and get out at my 236 or my 382. So I'm not low enough to buy yet. I'm not high enough to sell. I'm right in the middle of my range. So I don't want to do either of those things right now. And that's really the way that I want to approach something like that. So as far as oil goes, I'm going to take a quick look at this, then we've got to get out of here. Let's come to the all-time frame. You guys see this big emphatic down candle? Yeah, that was because they increased supply artificially. And since we didn't increase production levels and the amount of oil that anybody's producing, then we've moved up since that happened. So not crazy surprising to me that we've been in an uptrend since, all of last month. This big dip here, we drove down price short term. Our close was at 68 bucks. That was a $10 fall in one day because the U.S. government decided to add, I don't remember how many millions. It was like 50 million barrels, something like that, of supply to the market one day. But they didn't increase production. Okay, so what that means to me is that we're in an uptrend on oil, still like we have been for the last year, because, well, every government on earth is printing a ton of money, including the U.S. So, and they're also cutting. Well, the U.S. is also cutting domestic supply, so I don't see oil coming down. Just my opinion, and also really fed into by the technicals that this thing has been up. And to show you guys a pattern real quick, okay, this is a trend line that we had here. It broke, the market went up higher. Here was a new one, it broke, the market ended up going a lot higher. Okay, this one broke too, it went up a lot higher. This trend line broke, it went up a lot higher. That one broke, it went up a lot higher. That trend went broke, it went up a lot higher. This is what I believe is our trend right now, long term. Okay, so demand zones, show this real quick. Okay, this is when we had Obama and Biden and as leaders of what we used to call the free world up here. Okay, this is the price zone that we were in. Okay, we may come back and get into that price zone, We tried to get into it. They created a bunch of fake supply. We're headed right back towards it. Okay, so if anything, there may be a short-term scalp opportunity from the same price it turned around at last time. Otherwise, I might be looking to buy towards this zone. As long as you can manage risk, that makes sense, and come down to the 1 hour. I might be looking for low prices to buy here. And, finding those is, in my opinion, fairly straightforward. I might just use something like fib ranges. This is a new wave here. Oh, I missed. This might be where somebody draws one. Okay, so I might try to get into this 618 level down here at, 78.40, a dollar or so below. Might be a place where I want to buy and try to take this thing up to, $82, something like that. Okay, so oil's looking like lots of fun. I think it's commodity season for a long time, especially for something like oil. That's why I'm kind of gun shy on gold, and I'm not ready to short it to $1,300. I'm not ready to take it long to 2,000 either. Need more confirmation. Oil's a little bit more, of an uptrend lately. So a little bit more clear cut. If you guys, want to keep having these presentations, you guys want me to keep doing these, okay, I strongly recommend to give me a review. Because if you don't give me reviews, the people that want me to do lots of other things for this company are going to tell me that this is a waste of my time. Okay, so if you guys want these to keep happening, please, please, please give me a review. Not to mention, it really makes me feel a lot better about what I do in here, and gives me a better idea of what I should be doing in here if you guys give me positive reviews. Because if nobody talks to me while we're in here, you guys don't ask any questions, you guys don't say thanks, whatever. A lot of people are, and I appreciate Elizabeth. Thanks Philip, thanks Dale, thanks Gary, thanks Afzal, thanks Sam, thanks everybody that comes to these every week. I love doing these sessions. So help a brother out, give me a 5-star review, and I'll keep doing them for you. Because I want to. But it does take up a lot of my time on Fridays, and I do run. Let's just say I'm a director at the company, so this is a big distraction from my morning meeting setup that I have for the rest of the week. But it's way more fun for me than morning meetings. So if you guys can give me a review, would appreciate it. Done begging for that. If you haven't already, download this ebook. Okay, you guys want to understand how to actually score the news and figure out, like, okay, how many people are reading good news and how many people are reading bad news? That's really what this ebook is for, this FX Power Pairs ebook. So check it out. Okay, there is no other book like it on earth. I made this stuff. I wrote that book. I made that scoring system myself. I worked in search engine optimization. I'm the director of marketing at the company for a reason also. So, I combined that experience with web traffic statistics to come up with a trading strategy for who likes what investment versus who doesn't. Okay, so very unique thing. If you haven't seen it, strongly recommend you check it out. Thanks everybody for coming this week. Appreciate everybody's time. You guys have a wonderful rest of your Friday. And as always, be good or be good at it, everybody. Take care, folks.